Okay, hello everyone. December 27th, 2023. See what's happened in the market today. Some interesting stuff, some not so interesting stuff, but some interesting stuff as well. This is kind of an interesting article here in this Market Watch. Now, I don't endorse them or anything like that, but this kind of is something that kind of fits in the theme I've been talking about over the last week or two about how things are getting so euphoric and so bullish that this sets the stage up for a big move lower. Now, things that are really overbought like they are now can kind of keep going on for a while. But if there's a catalyst, if something happens over in the Middle East or in the Red Sea over there, or we get a spike in interest rates, because when people are really bullish, what do? They invest their funds. And what happens when they're done investing their funds? The market could run out of buyers. And that's the only place it can go after that is down. You need buyers to push the price higher. If the buyers are done, it ain't going any higher. It doesn't matter what the earnings are, what this is, what that is. So it says 72% of the stocks in the S&P 500 have underperformed. Now, I'm not really like a math whiz, but I would assume that in normal times it would be about 50-50. Half would underperform, half would overperform because the S&P is really just the average. So it says here that this is 72% of the S&P has underperformed. It says that is a record in 2023. So what does this mean? Well, it means that the leadership of the market is really kind of thin. It's not a broad-based rally. It's just a couple of the popular names are moving higher, and because of the way these indices are constructed, they could move higher, but a lot of the weakness in some of these stocks could be masked. If we look at, say, for example, the technology sector, the S&P technology sector, I think about 40% of it are Apple and Microsoft. So I think there's maybe 50, 60 stocks in there. Two of them account for 40%. So in theory, money could be coming out of like 50 of those and just going into those two big ones. And because of the way they're weighted, it could make the benchmark indice or the headline number move higher, which is great if you're involved in those names. But we're just talking about it could be masking some potential weakness. So bad breath, blah, blah, blah. All right, so the S&P, which is a market weighted index, has beat the equal weighted index by more than 12%. So if we go and we look at the S&P, okay, there are 500 stocks, hence the name, the S&P 500. And if we look, Apple and Microsoft together are about, I don't know, about 14%. Okay, so 500 stocks, two of them are 14%. Now, ironically enough, these stocks have kind of not really been performing that well. Apple is actually trending lower. We could see here, right? Trending lower. Look for support around this 190 level again. If this breaks, this could be the catalyst for the market to move lower. And Microsoft has been kind of going sideways. But here's the thing, right? The trend is your friend. It's an old Wall Street saying. And basically what it means is, hey, if you're long, stay long. Keep riding it. No one knows when this is going to end. You can talk to all the gurus you want. Gurus are a dime a dozen on Wall Street. All right? But you know what knows when it's going to end is the market. So we watch the market and we start to see signs of a reversal. That's when we adjust accordingly. And you don't even need to be an options trader. We can look at some of these inverse ETFs that are designed to go up if the market goes down. So here's our S&P, real kind of quiet day to day, but kind of inching ahead. All-time highs up around 480, so we are in spitting distance. Tends to be resistance though at former peaks, like there was here in July. See around this 458 level. That's because you got people who bought back here who go underwater and they regret buying, and they tell themselves, if this ever gets back to my level and I can get out at break even, I'm going to. So you tend to get these remorseful buyers placing sell orders at a level that was a peak before. So you get resistance at former peaks. And then what is resistance? It's a large group of sellers. Sometimes the sellers start to get anxious because they sense there are other sellers in the market and they start to undercut each other because the buyers are going to go to whoever's willing to sell at the lowest price. So a lot of times when you get to resistance like here, you sell off. Okay? It's just natural market psychology, so forth and so on. All right, we're going to look at our technology sector real quick here. Biggest sector in the market, about 28%. Just kind of pretty much doing nothing. It was basically unchanged today. I mean, think about it. $193 security was down by 1 cent. Healthcare, the sector is kind of been strong back up to this resistance now. Remember, things tend to sell off of resistance. We could see that here. It just happened. For those of you who have been following me, we watched this back in early December. We got to resistance and we sold off. Back there again. I think there might be some opportunities in the short side here on the biotech industry. So let me know what you think, because we're really overbought, which is a term that means we're trading above what would be our usual or typical trading range. That draws sellers into the market because they're going to be expecting a reversion. We're also close to a level where there's a lot of sell interest. So you get this kind of double whammy. You get resistance, which is a price level where there's a lot of sell interest, and you get the overbought conditions drawing sellers into the market. And then I think before I go here, I just really want you to pay close attention to the financials here. If this reverses and we get back below this 37 level, that's going to be our catalyst for a move lower. But until that happens, you just stay long. The trend is your friend. And this is going to turn at some point. People are just way too bullish, but whether that's tomorrow or whether that's in 2 weeks, that I don't know. But what I do know, if someone's been doing this for 3 decades, is to wait and be patient and let the market tell us what to do. Because when it starts to turn, those signs will be obvious. So hopefully you join back here, or you join the Benzinga Trading School, or you come back, and should be an interesting couple weeks going forward. Okay, thanks everybody. I will see you soon.